Good evening, folks. This is Andy Pedraza with Special Effects Academy, and we're on the start of the week session in the Forex trading room for May 2nd of 2021. We are going through our usual agenda this week. So we'll be looking at the prior week's results, our currency strength meter for the week, fundamental announcements scheduled, a look at the major pairs on the daily charts, any setups we see in progress, and a few words in conclusion. Starting with ledger, the long-term ledger is better than it was before. We had a couple of trades closed in our favor. We had a few losers as well, but we're getting back into the groove there. We also have a couple of trades open which are showing profit, or maybe more than a couple. I see four right there. So most of these are at profit or close to the break-even point. So there should be some more profit added to what we have there. Intermediate, we are growing. So the growth is a few percentage points above what it was last time. We've had quite a number of trades close out, some at profit, some at a loss. The winners are outpacing the losers, which of course is the way we want it to be moving. And the short-term ledger is still decidedly negative after we took that hit on the Euro-Swiss trade, though the trading itself has been pretty flat. Again, a mix of winners and losers. We have one trade remaining open right now, a long on the pound Swiss. Notes and opportunities for improvement. The market has been decidedly bouncy, though some peers are starting to move strongly in either direction. There's a few of them that I think are also stressed and very likely will be showing some strong moves, counter trends in the near future. So we have to be ready for that. COVID and its effects on the global economy are still the key variable, and also inflation concerns in the major economies. By that, I mean the US and Europe primarily, are starting to overheat the market, which can only get worse given all the money printing for stimulus purposes that are happening out of the Federal Reserve. We have President Biden's $2.3 trillion plan. And what that means when they have a $2.3 trillion plan is basically they do plan on printing $2.3 trillion. They don't come magically out of nowhere. Well, I guess they do. You turn on the printing presses, these dollars do come magically out of nowhere. The European Central Bank is also injecting money, what they call quantitative easing over there, into the economy again as a stimulus for the hard hit they took with COVID. So we'll see what that does. Inflation is the major risk, and that will probably be what moves the currencies more than anything else so far. Relative strength meter for the past week, the big mover was the Canadian dollar. It had its strongest move in quite some time, and the yen continues weakening for no good reason. It just does. The other currencies were pretty flat for the week, though they did have significant bounciness, I'm going to call it, especially the dollar pairs on Friday made some significant moves. Fundamental announcements we have scheduled for the week. We have the Reserve Bank of Australia's interest rate decision tomorrow night into Monday morning. So that's a little bit after midnight in the US Eastern time zone. So technically it's Tuesday, but for me it is still Monday night. On Tuesday early evening, we have the employment change out of New Zealand. We may or may not trade that one live. I haven't decided yet, but I did pin an arrow on it just in case. Thursday, we have the Bank of England's interest rate decision very early in the morning. That will definitely be traded. And we have the Reserve Bank of Australia's monetary policy statement much later in the day. And we will probably be having our evening session later to accommodate that. Friday morning is Jobs Friday, Super Jobs Friday, since we have the US and Canada reporting the employment changes, the US non-farm payroll, and the Canadian change in employment coming out at the exact same time, 8:30 a.m. That will also be live traded. And with that, we move on to the charts. We can see that oil continues bursting at the seams. It is very near its most recent high of over a year now. So it is at a yearly high, a very significant one too, as it showcases an almost complete recovery from the effects of COVID in March of last year. Now, in general, we are seeing all the commodities boosting right now. It's not just oil, it's lumber, it's copper, it's coffee, it's everything that you can call a commodity is rising very rapidly in price. And this can only be expected to continue again with the quantitative easing and the printing presses in the US being turned on. That will make commodities more expensive. At some point, it will start hitting end user prices. Your beef is going up. So your McDonald's burger, if you track that, is going to be going up in price at some point. And you know what that means when the things you buy go up in price? It means inflation. So it is a double whammy there with commodities going up on the tail end of production, which will result in inflation for the end user, for the consumer. And that will, of course, significantly move the currencies. It has to. So we have to be poised and ready for that because it is coming. With that, we move to the actual currency charts, the euro dollar. And I mentioned this in my little bit of a speech at the beginning of this session that the dollar has been weakening consistently, but on Friday it had a major retrace, which pretty much undid the entire week's movement in the case of the euro dollar, ending pretty much where it had began the week. So net changed none, but you can see how bouncy that market was, especially Thursday into Friday. Pound dollar, where it began, but it was a bullish movement Monday through Thursday, and then a complete collapse back to where it began on Friday. So we have a flat market for the week, but extremely bouncy one. USD JPY, probably the one exception, and this was mainly because the yen was weakening at a stronger pace than the dollar for the beginning of the week. And then on Friday, it got hammered by the dollar gaining strength. So it was a complete bullish movement on the USD JPY. USD Canadian, also, I would call it an exception here. The dollar did not catch a single break and hasn't for 2 weeks now. We have seen the USD CAD going down, breaking the final level of support at the bottom of the chart and not even a retrace at the end of the week. It stayed flat on Friday. That was about the only effect, but it is getting lower and lower. This is a trade we need to open if we don't have one open yet. This is a breakout. USD Swiss also going against the dollar for all the pretty much all of the week, except for Friday when we had the dollar retrace back to the bottom of the Ichimoku cloud. It still ended the week a little bit below where it had started, so it wasn't a full retrace, but it was sure damn close. We have to wait and see how this week begins today into tomorrow, Monday, and see if we have a retracement or a continuation. Smart money will be a continuation. I don't think the dollar is out of the woods by a far shot, long shot. Aussie dollar, same thing, except it wasn't really bullish at all for the most during the week, mainly flat, but then it did suffer on Friday with the dollar gaining strength. And the Kiwi dollar was bullish the entire week again, except for Friday when it undid the entire movement of the week and actually went a little bit lower than it had begun. So not only a full retrace, it was a beginning of a reverse. I don't think it's going to last. I think this and the other dollar pairs are showing some wonderful opportunities to trade them back into dollar weakness. And Friday's losses are gain, but we'll see how this week kicks off. We don't want to get into any of these trades until we see the movement actually beginning. Aussie CAD, and this is something you're going to see in all the CAD pairs. Canadian strength was the big news of last week, and they went, I think they exceeded where smart money would go. So I think this is overreaction by the market, which means we may have some good opportunities for retraces, not on all the CAD pairs, but there are quite a few of them, at least half of them where I would want to play the retrace. USD CAD, definitely not one of them. Euro Swiss has gone back all the way to support, and we'll have to see if that support holds and we have a bounce or what it's going to do. But now it is at a crossroads. So we're going to leave that be for now. We do have an open trade from last year on the intermediate. It is negative, but we're going to let that continue to play out as long as it doesn't pierce the bottom of the cloud. Euro pound, mainly flat for the week, didn't really do much. Tried to do a little bit of a move on Friday, but that quickly failed and it came right back down to where it had begun. Euro JPY breakout territory with a very strong retrace on Friday, and I think there is a good chance we can continue trading this one up before all is said and done. Euro Canadian, again, a Canadian pair moving into strength consistently, but it is at the bottom of the chart. This is one of those where I think a retrace, at least to the bottom of that blue channel, which means the top of the cloud, is probably in the works. This is one of two where I'm seriously considering jumping into the fray earlier and going in long with a pretty wide stop loss and just waiting for the inevitable turnaround. Everything that goes up will come down. Everything that goes down will come up. The market moves in cycles. So this is a prime opportunity right here. Pound JPY continues very near the top, below resistance, but has been giving it the old college try. Another one where the yen tried to make a bit of a comeback, or maybe it was pound weakness on Friday, but the rest of the week was extremely bullish, and it did end significantly higher than where it started, and it is at support. So if support holds, this one will continue going up. Aussie JPY, another yen pair that is very, very near the top, being stopped by that same level of resistance. It's been unable to pierce for months now, so we'll have to see if we get the opportunity. Problem is, I see the Australian dollar weakening as well. It is stressed. This is one of those charts I was beginning, which I consider to be stressed and prime candidates for a significant retrace or even a reversal. So this is one that I'm going to be keeping a close eye on. Euro New Zealand, essentially flat for the last 2 weeks after a pretty big drop a couple of weeks back, maybe 3 weeks back. But it has been just going sideways since then. We have to wait for it to wake up. Pound Canadian, and this is the second of the cat pairs that I think is overdue for a significant retrace, if not a reversal. It is at support, and the opportunity for a trade for the upside is quite good. Another one where I would not mind opening up a trade and just letting it play out with a very wide stop loss, so long a stop loss significantly below that level of support at the bottom, and then just letting it run for as long as it wants to run. Pound Swiss also very near support, and while I don't see this one as a great opportunity for a long, simply because there's not all that much room, maybe a couple of hundred pips there, it's still a good opportunity if we see that turnaround towards the top. Of course, if it does pierce support, we're going to be just as eagerly going short on this pair. As with all the other currencies and crosses and this, that, and the other, we are agnostic. We do not have a belief system behind our trades. We are trying to trade what is going to give us the most odds of being successful. And last but not least, the pound Aussie, one of the bouncier pairs, just going in all directions all the time. That has not changed. It's inside the channel. It's at the support of both the trend line and the Ichimoku cloud. My guess is that this one is going up more easily than it would go down, but we'll see what happens. I'm going to wait for the move to begin and then jump in. That is the end of the session setups we see in progress. The pound is struggling. I said that at the beginning and probably the middle of the call. So the pound is struggling, but it is still strong. It is the strongest it's been in quite a long time. I don't see any good reason for it to weaken. But again, the market can do whatever the market is going to do. We're just along for the ride. But I still think there are good opportunities to trade the pound up. The dollar looks to be in for a fun ride, and I say this because of what I've been mentioning with the printing presses turned on, the fears of inflation. All that's missing is one bad report. If we get a bad labor report on Friday, if we get a bad GDP, if the president comes down with COVID, whatever little tiny bit of bad news is going to cause the dollar to go into a tailspin. It's not a given, but I think the odds are pretty good. The Australian, and I just said it, it's looking extremely stressed. I think there is a very good chance that the Australian pairs are going to do some retracing before all is said and done. The yen, of course, the JPY pairs, the yen is not catching a break. If it does move into strength, it rarely lasts more than a day, and then it's just a complete rout. Even against the dollar, the yen is just very lackluster right now. At some point, this too will end. But for now, the yen is just not something I'd like to buy, though I may end up selling it. And the Canadian pairs, of course, the CAD made one of the biggest 1 week moves it's made in a long time. It is very near either the bottommost level of support or significant levels of support on many of the crosses of the CAD. And of course, we have to see if this is going to be a long-term movement and start putting money on it. And if we do have a retrace, like I think is pretty likely in pound CAD and euro CAD, then we may want to go contrarian and start playing it in the opposite direction. And finally, my parting words here in conclusion is that attitudes toward money do make or break you. When I speak with anyone for even a few minutes about money, I can quickly see what kind of trader they're going to make, and in general, what kind of success they're going to see financially throughout their lives. Seriously, in 5 minutes, talking with somebody I haven't met before, have never discussed money with, often less, I will get a pretty good idea. I can tell them where they're going to be in 20 years. And most people, they're just going to be at their same shitty job in 20 years with maybe a 0.5% raise every year and waiting for that golden parachute at retirement, which I'm sorry to break this news to you guys, but that is no longer coming. That paradigm shifted quite a while back. You have no recourse to a pension these days. If you self-funded via 401k or something like that, God bless you. If you work for the government or for some agency, you may still have a pension, but even those are going bankrupt right now. There is no assurance that if you retire from the police or from the fire department in one of the major cities, that you will have a pension when you're done. I had two back-to-back tax sales in the last week. These are sales where counties auction off properties that have not paid their taxes in a couple of years. And I ended up being successful way beyond all my expectations. I thought these tax sales were going to be tougher than they were. I ended up spending almost all my money, not quite, but almost all of it. And then I had a couple of conversations with people. One of them at the bank. I said I spent almost all my money, not all of it. I went to redeposit some cashier's checks that I had taken out for the auction, and started making chit chat with the cashier at the bank teller. And when I said that I hadn't used up all my money, I was putting some of it back. He said to me, "Well, that's good, isn't it?" I didn't even have an answer. I mean, what kind of idiot? I'm trying to spend all my money and put into properties because then my money is making more money. And this genius thought that me not having spent all my money and putting it back into an account was a good thing. So I just didn't have a response. I just mentally shook my head and let it go. And then when I was registering some of the properties in one of the town boroughs, so the utility bills and all this would start coming to me instead of the previous owner who had stupidly not paid his taxes and lost the property for pennies on the dollar. And these people in the town offices have seen me registering more and more properties. They started asking me, "Wow, you're buying a lot. What do you do with these properties?" And again, it was just like shell shocked. I was a deer in the headlight. What do you think I do with these properties? I rent them and they make money for me. And this is why these people in 20 years are going to be there in their same shitty jobs, recording every property I buy own all of it, and they will be retiring in 20 years with whatever crappy pensions they have, and very likely I'll see them again in 20 years welcoming me to Walmart. This is not the life I wanted for myself, and I made sure I didn't fall into traps. But remember, regarding attitude, scarcity is in your head. If you believe that money is scarce or resources are scarce, then you are right. I don't live in that kind of world. When I want something, I make sure I make enough for it to come to me. And playing it safe, holding on to a job or not trading or not taking any risk, that is the biggest risk you can take, playing it safe. And lastly, if you have no imagination, then by all means stick to your 9 to 5, because no one can help you. You have to want something, imagine it being in your hands, good enough to almost taste that thing before you can actually move forward to get it. So if you have no imagination, stick to your menial job and again, enjoy. There's nothing wrong with that. Not everybody needs to be rich or have everything paid for them without work. Some people, I guess, need to work, and God bless all of you. So that's going to be it for me this week. Any comments or questions from anyone? Okay, thank you so much. I'll be here normal schedule for those of you who are subscribers. So you'll be getting my email with this week's schedule very shortly. I look forward to seeing you, and the rest of you guys, well, enjoy. Hope you join us someday. Have a great week and see you next Sunday. Bye-bye.